Hello, it's Forex News for Monday, November 16th, provided to you by InstaForex News team and me, Darika Isakova. The Bank of England head Mervyn King eased concerns regarding the upturn of the country's budget deficit. King pointed out the possibility of the central bank is to cancel the expansionary actions, not applying for a sharp increase of borrowings. During the press conference, where a special emphasis was put on economic results of such necessary state spending cut down and tax raising, King reported that safe fiscal plan is required. Apart from this, he also turned down suggestions that the Bank of England will have to buy the government bonds for just issued money. Even so, the analysts were not surely convinced by the chief's mollifying tone. Some experts noticed that although the central bank's competence does not include the state debt financing, in case of refusal from such part, the economic effect will make a necessity to expand the bonds volume. In the document conceded at the G20 meeting in Scotland, the IMF declared that developed countries with huge debts have to avoid running the fiscal stimulating measures for too long. At the same time, the IMF supposed that monetary policy can remain smooth for a long period of time due to bond price pressure. The Monetary Policy Committee of the Bank of England has been keeping the interest rate at a record low of 0.5% since March. Earlier in November, the bank decided to increase the purchase bonds volume for new issued funds within the quantitative easing program to £200 billion. Despite the promises of two main British political parties to tighten the fiscal policy after popular elections, which are expected in June of 2010, in a short term the government borrowings are likely to zoom up. By the end of the financial year in March, the Debt Management Department of the British Treasury is to sell record quantity of state bonds which will approximately amount to £220 million. Such debt financing will be not cheap, and it can be more expensive if the next government would not develop a new debt-cutting plan at short notice that will make the rating agencies to lower the credit rating of Great Britain from 3A level. We will be back tomorrow with the next release. Thank you for watching us and goodbye.